Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at technical charts and then try to understand what happened in the market during the previous week and also plan for a bit of trading week ahead. But starting from tomorrow, Monday, September 22nd, 2025. Let's go ahead and see what the charts are saying. This is the weekly and the daily of the Nifty, and this is weekly and the daily of the Banknifty. Let's see what's in Nifty. So it seems like it's in a trend line. It remains in a trend line. Has been reversing after some small correction that happened earlier. We settled in towards the top of the trend line channel. Now to see whether it sustains or not. On the short term, similarly we see multiple parallel channels and it seems to be almost very close to the top of the trend line channel, as you see there. And market continued to show up move, except for 2 days of pullback. Banknifty similarly is in a very long narrow ascending wedge for quite some time, and it seems like it's at the fag end of that almost, but it's not breaking that aspen for a long time. So last 3 weeks Banknifty also moving up. Similarly on the right side you see the daily charts for 2 days of pullback is there, but otherwise market is managed to close about 20, 150 and all those daily expansion moving average, and it seems like it's heading towards the top of the trend line channel where some resistance could be felt. Further resistance could be felt actually. So let's look at it. So what happened? It's all in all less than 1%, near to 1%, 0.85, 240 points up on Nifty, about 20 expansion moving average. And remember, we are in a 72% of big bull rally, and it's 17.23 is the max retracement that happened some time back. And the rally has been going on since June 2022, and market seems to be moving up once again, heading towards the 26k. Banknifty also has continued to move up for the last 3 weeks, and it's 1.18. It has done better than the Nifty, and 646 points overall up above the 20 expression moving average, while the practice in Banknifty has corrected hardly less than 12.5%. That's very small correction, so keep that in mind. So that's something let us see. Now let's see the candlesticks. Bullish solid 3 weekly candles is what you see on the Nifty, and Banknifty also 3 solid reversal candles. Very good bounce up of 3 weeks is very evident. All of the bullish candles. Now the daily charts will help you understand what happened in the last 5 days. Monday was small consolidation. After it, 2 days it broke out kind of, and then Friday and Thursday it was profit booking. Same Banknifty also. 2 solid candles on Tuesday and Wednesday, and then you have some profit booking. So all of this has happened from the good news of the, not the good news, the potential good news that could come in on the trade deal with the US. Things have not happened. If that does not happen, there could be once again pullback that could happen. If that does happen, it could be a big breakout. And remember, we have a W patterns, double bottom. Neckline is breached, and market has taken a support once again at the neckline of the W. And there are trend line channels that we already see in all of that. Now the Bollinger Bands are showing clear expansion, although it has fallen off from the walking of the bands, but its expansion on the side of the volatility, which indicates more up more could be possible. Well, Banknifty is not showing that expansion on the upside. It's still consolidating, but it's having bullish bias just like Nifty. So that's what Bollinger Bands are telling us. More of moves could be expected on Nifty, and consolidation could be expected on Banknifty. Now, if you look at the moment of the trend using the RSI and the ADX indicators, you see that the multi-time frame analysis, the weeklies are showing that it's not at bullish, but it's heading towards that. Sideways rising up is weekly momentum or the medium-term momentum on the right side. Nifty in the Banknifty is maintaining the short-term bullishness, but Banknifty slightly slipped off on the Friday's profit booking that came in slightly in the sideways. Otherwise, links look fine. So overall, the trend has picked up beautifully, and its trend has completely turned to bullish, although it's small weakness in the strength of the bullishness in the case of weekly, but otherwise trend seems to have crossed over to the bull zones. That's very good news. But momentum has got had picked up, but it has got a hit back on the Thursday into Friday's moves, and it has slightly slipped in back, as I said before. So overall, the momentum is sideways and bullish only in the short term, but trend has picked up well. The right side, what you see is the India VIX, the fear and the greed indicator, and it's at historic lows. 9.97 is historic. The lowest is very close to that. So that's low voltage ranging, very difficult for traders, especially the options seller. So one of the 1.5% for the fall. So absolutely no fear in the market is if you look at it that way, it's good. But for traders, you may have some problems with the premiums and the IV percentiles and all that, right? Options and futures options analysis is what the next we're trying to understand. That helps us to get the support and the resistance levels. In addition, it tells us what the PCR of the options is. PCR seems to be bullish on the Nifty, but Banknifty it's turned slightly bearish below the 1 PCR. So it's a mixed bag. It's all because of the Thursday Friday moves. And weekly Nifty September 23rd ish options II. Options OI showing this PCR's mixed bag, but for the futures OI it's showing bearishness also. Means for both indices, long and wide clearly. So that's a build up that is happening Thursday Friday, and so options OI is not giving a clear picture on except on the Nifty. Right? So options is so we'll have to use that options data that is mentioned here on the Nifty to define support resistance levels. That clearly shows a very narrow range. 25,300 25,400 is where the highest put and call writing is seen. That's where the highest support and resistance can be calculated. Second highest is 24,000 and 26,000. That's a wider one. That's where the highest put, second highest put and call writing is seen. But Banknifty, that's a monthly options levels that we're looking at. It's a very wide range, of course. 54,000 and 56,000 is where the highest put and call writing is in. 55,000 and 57,000 is the betting on the options. The second highest put and call writing that is seen there. So that's why we are finding these levels. No, the market seems to be sustaining around 34,000, and then it could go in a very narrow range. There could be resistance there, but it is likely to hold 24,000 is what it says. Now another way of looking at it is look at the charts, and you can see that it's very close to a trend line top channel. So the first level would be this previous swing highs that we have done and breaks out from there. Then the next resistance with the next previous swing highs that's coming at 25,669, and then there is a gap at 25,739. Then there is another resistance at 25,850 zones, and then 26,000 rounding number will have the resistance. That's downside. Similarly, you'll have the moving average support of the 20, 50, 100 and all that. So 25,000 seems to be very solid support because it's for the 100 expansion moving average, the 20 expansion moving average is coming to that. So 20 expansion moving average is breached, and 25k is breached, and it's not able to sustain. Above that, in the next few days would mean that it could be correction, continuation, and if we let them to break out. Otherwise, things seem to be fine. So Banknifty is similarly, it's in the trend line channel, multiple trend line channels, inside one, and it's heading towards that. That could be huge resistance in the 5600, 56,000 rounding number zones, and above that. If it breaks out and closes above that, it could definitely go to the 57,000 at least, right? And then to the all-time highs. That's the resistance downside. Moving average, 20 extension moving average supports at 55,000. If it is breached, then we may have trouble with the up move, and then we can see corrections as low as the 200 extension moving average could fall near to the 54,000 levels. So the range is this 56 could have big resistance, and it could go as high as 57. And 54,000 could have support at that, and that is breach we have in danger. So that's resistance levels are marked there. Have a look at that close by, what the support and resistance seen for the next levels, and correlate that with what the options data is showing, and then you can find the levels of support and resistance to place your bets. Now let's move ahead and see how the different sectoral indices have done. So Nifty ID index into a breakout, green close there. But there's a divergence kind of thing in the momentum, and seems like it's sideways rising up. So ID is recovering, but we may have some bad news next week with respect to the H1B visa fees hike and all that. So slightly be cautious on the IT sector, but that seems to have recovered overall, which is positive. It's a defensive sector, and usually when the market is struggling, defensive sectors helps. Now downside in the metal, you see it has climbed back in the bull zones, and metal seems to be bullish. Auto also bullish. Those are the two sectors which have recovered first, while others are still picking up. Now you can see that the pharma, just like the ID, is also struggling sideways, but it's a green close there. As well, FMCG seems to be consolidating in the sideways. That's the only sector that is close red, flattish red, I would say. And reality also is in the sideways and struggling. So pharma in the metal, and what is doing good, recovery. So overall, everything seems to be sideways and doing good, right? And two of the sectors are bullish. That's a picture. 1.3% up. IT sector 1%. Metal up. Auto sector up 1.5. Pharma 1.5%. And reality is 4.5%. Very good recovery. And it's only the FMCG that's not doing too. So you can place your bets on the long side. The metal and auto sector is what medium-term analysis is telling us. Let's move on and see how the heavyweight stocks are done. The HDFC Bank chart is what you see here. It has faced the resistance at the top of the trendline channel, and buyback has happened, and we are to the 1000 plus levels. It still face resistance, but market seems to be indecisive and consolidating right now. HDFC Bank, the trend is slightly crossed over the bill zone, is also in the medium term, but nowadays in sideways. And Reliance Industries seems to be green close, but sideways is what it shows. And ICICI Bank also sideways and falling. So all the major big heavyweight stocks that contribute maximum to the index is in the sideways, and not completely moved to the bull zones yet, just like the indices medium term charts as well. So left side what you see is Nifty and TCS, both of them managed to climb the sideways after the IT sector recovered, and Konak Bank as usual consolidating by a green close and sideways. ITC, like FMCG, had some bearish moves. It's consolidating. LTC also closed rent. So overall, there's no particular stock that's in the bull zones yet, all on the sideways. Even the big major three lands, ICICI Bank and then HDFC Bank also. So that is kind of it's medium term that we talk about, not short term. So we'll have to keep a close watch on these, and then we'll have to have some leaders in who could come in to push the market up. For that, the price of the buy, of course. Now, broader markets, you can see the mid cap and the small cap is showing big moves, solid bullish wide range. Candlestick is seen, and mid cap has actually managed to climb over the bullish so far as I-60, and then small cap also seems to be heading towards that. So, broader market is also trying to recover and then hit the all-time high. So that is very positive. It's not just the indices, and obviously the big buying by the DIs is all that we are seeing. FIs have been selling once again, net to net, 1,590 crores of selling in the cash is what you see, by 10,000 crores plus of buying from domestic institutions. Domestic institutions is what is all in the market is very evident, and following the Fed interest rate cuts, hopefully some FI money could come in the next week, and if that comes in, that's the only way that the market can move up. Otherwise, and there could be taking some more time for that. Now the net longs on the derivatives and the FIs and DIs has also moved up, so they're betting on the long side is what we can understand of derivatives as well. So that's institutional participation data, and moving ahead, if you try to understand the global markets, the commodities and currencies and oil and gold and US markets and all that. Let's begin with the currencies, and it's flat down. Dollar is down, means good for us. Dollar is in the bearish zones at the momentum. It's 97.61 is good for our country, and the fact is rupee remains to be weak, but some gain in the rupee. 0.21% down used INR currency charts that you see. The downside top what you see is the dollar falling, which is good, as I said. Crude oil is also very good rates at near to the 60 level, 62.35, and momentum sideways, no problems there. Gold is where the trouble is, in the sense for the hedges it's not a trouble, but gives us to think why is money being put heavily on this gold. Because would the equity market loses all the money? But people hesitate to buy and invest in equity if they find gold more attractive. It has been doing 125% kind of a rally from the recent low, and it's not stopping. It's non-stop. It's breaking out, and it's an all-time high. Absolute bullish moves on the gold gives us worry and also healthy hedges. But gold is breaking out. Crude oil and rupee and dollar and all that seems to be okayish, even if the rupees remains to be weak. Now, the US market, the Dow Jones is showing that it's an all-time high. Nasdaq all-time high. S&P 500 all-time high. And all of them bullish momentum rising. That seems to be 1%, 2% kind of up moves, and its mother market is closing at all-time highs. Green is always positive for the world markets, especially emerging markets like ours. And that's the story. Global cues are good. Nothing much wrong there. And that's about the analysis, and we move to the stock picks to actionables. We have a couple of handle breakout possibility that you can see in the Canada Bank. One is bullish, trend is bullish. Crossover has happened, and volumes also seems to be good, and price pattern is also bullish. So 1:2.5%, 1:2.5 ratio. Profit can be touched and you can trade your losses in the upside. Alchemical trees is also a W pattern, consolidation breakout possibilities there. Have tight stop losses, moment is bullish, volumes are good, trend is also good as per the ADX, and it's a nice to RiskReward and trail on the upside. So that's alchemical trees and Canada Bank on the long side. Now keep that in mind, this is not trade recommendations, these are only for indication purpose. Taking your risk with your money is your decision. You have to analyze and you have to take a view on the market before you dive into investing your money, and I'm absolutely not responsible for that. No, this is a strategy actionable, again not a stock recommendation, but we always go for the Batman, which is half hedged, not completely hedged. Keep that in mind. There is a range, very little profit and options and can be only available at this premium levels, but that's giving a decent profit in the very wide range that we need when there is volatility spikes that could happen. So that's a Batman where you're sitting inside hedges and selling OTMs outside. And if you want, you can buy the wings also, but then you'll not have anything left over with the premiums. We talked again from weekly options with this low premium. Keep that in mind. So still, this is a Nifty weekly option, strategy, which is reasonably good. And depending on the risk appetite, you can increase the number of lots and all that. That's safe strategy. Let's try to wrap it up. So market seems to be bullish once again for the third week, and this gained and closed clean. And yes, potential trade deal and all that is what may be moving the market. But I is still net sellers this week as well. Let's say like last week. And remember, the highest correction that has happened is 17 to 12% only on the indices, and the rally has been going nearly 70% up from the last major swing lows. And what we are trying to find the market, we used to bucket all the different factors in favor of the bulls and the bears, all the parameters that we had studied so far. So gold seems to be overweighing, and obviously there's no fear on the VIX at all-time lows, and momentum is short-term is bullish, and almost all near to the bullishness you can say on the Nifty, the Banknifty. The trend is absolutely bullish. Crossover that has happened. Also there's some weakness in the strength of that bullishness. Yes, the trend is bullish, and operant PCR is bullish in the Nifty, but not in the Bank. Use markets are green, which is very positive, and bond demands are expanding on the upside of the Nifty, but on the Banknifty. Metal and auto, two sectors sustaining the bullishness that happened last week, and others are holding on and then catching up. Major heavyweight stocks are sideways and catching up, and broader markets are solid breakout bullish candles seen there, and price seems to be above the 20 exponential moving average. So all things in favor of the bull scene. And what is in favor of the bears? It's operant OI Friday move of OI futures build-up is negative, long and wide. PCR on the Banknifty is not that great. Momentum on the Banknifty also seems to have slightly slipped on the Friday's profit. Okay, and stiff versus upside as we had seen already in the analysis. Because the banks of the Banknifty is not showing an expansion yet. So these are the factors that's in favor. But overall, the bulls are way, and I was mildly bullish for the next week. But keep the cautious tight stop loss, because anything could happen to US tariff news could come out, could be positive or negative, and market would react to that. So volatility can be expected, and prices and all the VIX are very low, and the spikes could be too costly. Option buyers may be making money, could be make money at this point, if at all spike happens. So the range that I look forward for Nifty and the Banknifty is 24,000, 26,000, and 54,000, 57,000, and that's very close to the next leg of rally. If it's managed to sustain above these levels, that's where the next rally begins. Until then, it may be correcting and consolidating. Time correction is all that may be happening. Now that's all I have. Always hedge. Protect your capital. That's all you have. Trading is all about risk management, nothing else. Technical, go for a toss. When there are black swan events, keep that in mind. Always protect your positions, protect your portfolio as such. Using hedges, and you can also use hedges for using different strategies of making rental incomes and all that. Check out the playlist. That's all I have for this week. If you like the content, you can subscribe, and if you're not done that, and if you like it, you can hit the like button. You can put in your feedbacks and all that. We value that a lot, and you can also share it to others. I appreciate if you do that. And I'm also active on the X with the regular technical charts and all that's posted there. So if you like, you can subscribe as well. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.